You're listening to the Money Monopolizers podcast, helping you take control of your financial destiny. It's about time that we invest more in our financial literacy and work towards building generational wealth. If you think you're ready to do the same, then you've come to the right place. Alex, Marlon, y'all ready? Let's get this bread.
What's good, everybody? It's Alex Kamunya here, and we're back with episode 46 of the Money Monopolizers podcast. And I am here with my co-host, Marlon Walls. Marlon, how are you doing today, bro?
A little excited and a little bit overwhelmed at the same time because I'm going through a whole lot of life experiences right now involving selling a house, trying to buy a house in Houston, got a job offer this week. I actually accepted that, and I'm trying to finish up my thesis, and I'm currently writing the very end of it now. So everything is coming to a close, and a lot of things need to happen within the next couple of weeks for me to be able to fully transition from Purdue onto the rest of my life. So it's an exciting time over here, but it's very, very busy. How about you right now?
Nah, you got a lot going on, but that's good. It's kind of like you just wrapping stuff up. So that's definitely exciting. Shout out to you for getting that job offer in Houston. That's definitely gonna be good leverage.
For sure. You ain't lying. That's it.
But yeah, that's good though. That's good. I'm still, out here hustling, doing my thing. We just closed on another house yesterday. It was the house that was down the street from the house about 2 months ago or a month ago. So it's kind of cool to, buy multiple houses on one street. That's, you're doing something right if you own multiple houses on the same street. Not a lot of people can say that. So, that's going to be dope. Getting that one underway, hopefully next week. It'll be another flip. We're trying to build this capital and, get into an apartment complex, hopefully next year, depending on how many flips we can knock out this year and next year. That's what it's looking like. And of course, I got the trucking going on, so that's still going well. The rental cars. I was looking at some other stuff last week, but I had to tell myself chill out right now. But that's just my mindset. It's just hustle. Like I said, if anyone is interested in investing in real estate, with us in terms of private lending, definitely hit us up. We could definitely make that happen. I'm gonna put this plug every episode because I know, I've been getting a lot of people that have been interested, and we just want to, help people get better ROIs than what they're getting from their bank accounts and other investment vehicles. So, but yes, that's pretty much it as far as housekeeping goes. I think, is there anything else? I don't think that's it. But yeah, speaking of grind, though, today's guest is. We had a great episode today. Every episode is great, but this is a super dope episode. I could probably say that about every episode is super dope, but this episode. I'm about
to start playing like a recorder, bro, and just start bringing it on. You're gonna say the same thing, be like, yeah, that makes sense for this episode too.
But think about it. When am I ever gonna be like,
this one's average at best, like high. It wasn't nothing great. It's alright.
I mean, we have had said it, on the DL amongst ourselves.
This is authentic though, for sure.
Yeah, but this for sure, this is a dope episode. We got to kick it with Ayesha Selden. She's she's a mogul. We can just say that she's a mogul. She's a legend in this game of wealth creation and wealth building. So we had wanted to get her on here for a long time, and we'll kind of tell that story in the podcast of how when the first time we saw her and kind of manifesting this onto the show, but and how Marlon was able to do that. So we'll talk about that. So listen out for that. But besides that too, we got into a lot of dope stuff in terms of how she's literally come from the mud to millions in terms of where her net worth is right now. She came from the bottom and she's really killing it right now. And you can definitely learn a lot from her. I learned a ton from her. I'm gonna listen to this while I'm editing it, and then I'm gonna go listen to it again after it's finished, and then probably listen to it again a week later. This might be one of the ones I listen to at least a couple times a year, just because it's so much good stuff in here, and these are lessons in here that are essential to building wealth in terms of things you need to be doing. So yeah, it was a dope episode. That was a mouthful, but what did you think of it?
Yeah, without giving too much away, I really just, I mean, we talk about this, we beat this dead horse into this, I don't know, to it's like destroyed, but we talk about mindset so much. And I really like how she stuck to hers, like regardless of what the circumstances were, like how she would approach different investments. I know I let her give her own story to it, but I love the fact that she would always have a plan and stick to it regardless of the shiny new object, the shiny new investment that's currently out there, especially if she doesn't understand it. So she definitely, I love her mentality as far as like getting a strategy and sticking to it. And I think she was a big testament to that, especially like with her lifestyle today. So just break it up into parts if you got to. This is a great one.
Yeah, so for sure. So let's get right into it.
Yep.
Hey, Ayesha, how you doing today?
I'm well. How are you?
We're doing fantastic. We're super excited to have you on here. Like we was talking about earlier, man. We had manifested this one a while back, so super excited to have this conversation with you. Definitely.
Yeah, I'm excited to finally be on. Thanks for your persistence. And I try to give back as much as I can through podcasts and IG lives and all that stuff. So I'm excited so that we can get some knowledge out there today.
Facts. So, and real quick too, shout out to Crystal off on Instagram, Crystal Financial Friend. She kind of connected.
She alley-ooped it. She came in like, look, they've been trying to get with you, so she made it happen.
Yeah, so shout out to her for that lob, for that assist.
Yeah.
But yeah, let's get right into this. So I think first, like the way we start really every podcast, we want to really dive into your background, your upbringing with in regards to finances and kind of how you got started on this journey to being the mogul and the legend that you are today.
Yep. I mean, so I'm here in Philly now. I'm like I mentioned earlier, by the end of this year, I'll be bi-coastal once my place in LA is done. But Philly is home. Philly will actually always be home. So I grew up, born and raised in South Philly. To a teen mom. I mean, I've got a story very similar to a lot of people probably watching the podcast. My mom had 2 kids. My sister at 16, me at 19. Our first home was in Passyunk Homes, which was a housing project in South Philly. And my mom was first generation college educated, had 2 kids. And when she had 2 kids by 19, she was like, all right, I probably need to do something with my life so that my kids can have a better life. Put herself through, got her bachelor's in nursing, became a registered nurse. And we grew up still with a single mom. I remember asking my mom how much money she made as a nurse back in the 80s. And she said she was making like $30,000 a year, which at the time seemed like a lot of money to me. I was like, wow, 30,000. But 30,000 raising 2 kids. And we always had a lot of people living in our house, aunties, people who were, she'd grown up with that were trying to get their lives back together. So, we always had a house full of people. So we were poor. We lived in the hood. And me growing up, I've always been very money motivated. Like it was just kind of something that was innate in me. I remember when we were leaving the area the house that my mom had bought probably when I was around 10 or 11 in South Philly. And it was fairly close to downtown Philly. But it was still the hood. There was a housing project right around the corner. And I remember telling my mom as we were moving, I said, look, don't sell this house. I just kind of feel like at some point this house will be worth a lot of money. And I remember she ended up selling the house in 1997 or 1998 for $35,000 or $40,000. That house today is probably worth $500,000, like in as is condition, just based on the location. Yeah. So that for me, and it never dawned on me because at the time I was maybe 18 or 19. It never dawned on me that I could have bought the house. Because she was scared that her tenant would leave. She would have to pay 2 mortgages. It never dawned on me at 18 that a $35,000 or $40,000 mortgage was $200-300 a month. It never dawned on me you can buy it. And I was working at a bank as a bank teller at the time. I could have certainly purchased that property and paid and afforded the mortgage. That never dawned on me. So when I graduated from college with a dual degree in economics and marketing, I made a very conscious decision that would never happen in my family again. So I said, I'm writing a second book, and I'm talking more specifically about real estate. And I basically referenced that event that happened that I think was a bit of a shifting point for me. And after that, it's been revenge season ever since. So I literally have dedicated most of my professional career and personal career to building assets that eventually I can pass on down our family line. So that's kind of how I got started. Right after college, I became a licensed stockbroker and then a certified financial planner 3 years after that. So I've been in the personal finance space for quite some time. I don't talk about that very much on social media just because my compliance department, I've got regulations on what I can say and what I can't say and what is construed as advice on social media. But I've been a Series 7 licensed stockbroker since 2000. I started with my firm. It'll actually be, what's today's date? It'll be 20 years tomorrow. Wow. So I've been at this for a while. So it's, people kind of look at me and they make comments about like, okay, we see what you're doing. I've been at this for 20 years. I've been doing this a long time. So that's my background. That's a little bit about like how I got started.
Yeah.
Go ahead.
Okay, yeah, I was just gonna say, man, you definitely are an OG in this game. 20 years, that's no joke to do anything, and to be in that financial game for that long is serious. And one thing I really like, about your story is that like you had like a personal, moment. Like you said you were already like money motivated, right? But you had like that personal moment that like, like, yo, that what happened back then is not gonna happen no more. And you could, that's one thing I always say too, and this is not really exactly related. This is like a little bit of a rabbit hole. But one thing I always say, especially, is that one thing that wasn't passed down, whenever, you talk about slavery, 20 years ago and all that stuff and the 40 acres and a meal stuff. The thing that wasn't passed down, I don't necessarily think it wasn't like, obviously you didn't get the land, you didn't get the opportunity to create wealth as Black people. But the biggest thing that wasn't passed down was that financial literacy, that knowledge about, what it actually takes to create wealth. Yeah, you had that was like an epiphany moment kind of thing where like, that's never going to happen again. So it's really dope to see. And then the fact that you just went into everything money after that, it's nice to see.
Yeah, I wanted to comment on this pretty much the same thing because I look at it as like a form of failure that she went through, is seeing that how her mom sold the home for like for $30,000-$40,000 and now seeing what it's worth today. I think that's kind of one thing that may have really inspired your buy and hold mentality. Like you want to hold stuff for the long term. You want to own something because you know how the value definitely goes up over time and how that's what really creates wealth for families. And so so by seeing that when you're growing up and seeing like that's a form of failure, like, okay, what lesson can I learn from that? And one of your biggest lessons I think you took away from that was just that buy and hold mentality and just holding something for a long term. Because you said you were telling her, don't sell this home. And then you see the ramifications of selling it in the first place. Yep.
I mean, Marlon, that's a great point. And I think that oftentimes, especially as investors, our experiences shape how we invest. So you're entirely right. For me, I cringe at the idea of selling properties, and I have sold properties over the years for a variety of different reasons. There's one particular block my real estate partner and I own 3 properties on, and we flipped one and kept 2. We flipped one just to raise capital to be able to put back into a lot of other projects that we're doing. But I drive by that property quite a bit, and I'm like looking at it like, I can't believe I let go of an asset. So my experience having had, as a kid, having my mom sell an asset that I knew at 17, 18, I knew that property would be worth some money down the road. I knew it. I mean, we were literally like 7 blocks from the main artery that runs through downtown Philly. I mean, we could very easily and comfortably walk right into the city. And I'm like, just based on proximity, I know this will be worth something at some point. And as you know, throughout history, there are gradual transitions where, there are times in history where folks are moving into the city, out of the city. I mean, there was white flight out of the city into the suburbs many, many moons ago. That trend has sort of reversed itself, where folks want to be back in the city now. We'll see how COVID impacts that. But you're absolutely right. My experience shaped who I am as an investor today. I'm not interested in flipping. I don't even day trade. I buy really, really good things, really, really valuable assets. And I forget about them. I hold them forever. I was just telling someone the other day, my very first investment in Apple stock was in 2007. I plunked down, I think it was like $8,600 in Apple inside of a brokerage account that I have. In retrospect, I should have done a whole lot more, but it was just money. I'll just throw it in Apple. And today, that investment, because I haven't touched it, I haven't sold it. When it started kicking off dividends, I think Apple started paying dividends again in 2011 or 2012. That $8,600 investment is worth almost $300,000.
Wow.
So, and I've had and it was $8,600. When you think about everything that Apple has gone through from 2007 up until now, we can of course see the evolution of Apple or a company like Apple over time. But the reality is there was a lot of bad news that's happened for Apple between 2007 and 2020. In those 13 years, there have been, Apple's had a lot of challenges. Steve Jobs, kind of like the blood of their organization, passed away, their CEO. And they've had Android. They've had so many different issues and challenges, and you have no idea how many people have told me you should sell your Apple. Like they're going down now. Their iPhone sales are slowing down. You should sell it. And I said, you know what? Not only did I keep it, but I ended up buying more in various other accounts over the years. So I absolutely buy into the philosophy of a buy and hold model. Warren Buffett, who I've studied just over the years, talks a lot about his hold time is forever. He says, I think he said something like, I won't hold a stock for 10 minutes that I wouldn't want to hold for 10 years. So when I invest, it is not about speculation. It's not about, can I make a quick lick off of this? Because that to me is the equivalent of, like, if I want a quick lick, I can go to Las Vegas instead of the blackjack table or the poker table. That to me is a quick lick. Yeah. And I approach investing very, very differently.
Yeah, and that's a phenomenal way to invest. And I think that's like really the book The Intelligent Investor, I'm sure you're familiar with it. They talk heavily about that strategy of like, it's just holding valuable, like blue chip stocks, like just those companies that are going to, always be there, like Apple's and Microsoft's. Facebook is one of them now, in my opinion. Those are the companies that are like, you cannot go wrong holding them, even in the ups and downs. So all of that being said, though, so what does your real estate portfolio and also your net worth kind of look like today, if you don't mind us counting your pockets a little bit?
So my real estate holdings, shoot, I wish I would have known. I would have looked at my my net worth sheet. My real estate holdings, I've got 31 buildings, which is about 40 some units. My real estate's probably worth somewhere around, I don't know, 7 million, 8 million or so, which I think the more compelling story is I've been a relatively conservative investor over the years, meaning my goal was to build a real estate portfolio without a substantial amount of debt.
Yeah.
So of the few millions or what millions that I have in real estate, the more unique story is I think I have maybe like 4 mortgages. I mean, I'm not very debt heavy. So that doesn't drag on my net worth very much. And then I've got a few $1 million worth of stocks on top of that between 401k and various investments. So it's some millions. It's some millions.
Yeah, but I want to comment on that because I know you said you were a stockbroker as well as you have like this vast real estate portfolio of multi-millions at this point. And so most investors that I hear about either are like well-versed in stocks or well-versed in real estate, but not so much both. And so why is this not the case for you? Like, why have you decided just to go both routes? Yeah,
I talk a bit about that, where you typically find stock people are just stock people and real estate people are typically just real estate people. I mean, at the same time, that's, people tend to find their niche and stick to it. I forgot, I guess that is another couple million in my I have a franchise. So that's that's also
the way you said that.
Yeah, I forgot about that.
Over there.
Yeah, that little thing. But you're right. Usually people kind of find a focus. In fact, my real estate partner she and I have been real estate partners since 2013. So we're now 7 years into our very first property that we purchased together. And she has no stocks. I mean, she's, and we're probably as close as two partners could be. And she mentioned, like, during this whole economic turndown, people have been more vocal about stocks. So she bought some stocks, and then she, like, it started like getting volatile. She's like, I don't know how you do it. I sold it. I can't deal with the volatility. So she feels more comfortable, and she owns, millions and millions of dollars worth of real estate. Like me, she's very low leverage. So I think that people kind of find what works for them and they stick to that. Me personally, real estate was more of a hedge for me for stocks. So when I look at things, for me, I'll invest in any asset class that makes sense to me. So if I can sit down, and I think I have a fairly financial mind, if I can sit down and you can explain something to me and I can conceptually get it, and if there's a good return there, I'll park my money there. People ask me quite a bit if I have money in digital currency. Someone tried to, I sat down with someone, I said, explain Bitcoin to me like I was a 3-year-old, or a 5-year-old, right? And they couldn't explain the intricacies of how it works. I mean, I get the fact that it's a digital currency. I get the why behind it. But because they couldn't really explain the technology to me and have me understand it like you would to a 5-year-old, I said, no, I'm not going to invest in it because I don't get the intricacies of it. And if I don't understand the intricacies, I'm not going to invest in it. So that's been kind of a sticking point for me. And quite frankly, I think I'd be a whole lot wealthier if I was willing to just invest in a lot of stuff. I mean, I was introduced to Bitcoin many, many moons ago, but because it just didn't click to me, I won't touch it. So I'm a bit stubborn in that sense. But for me, I like the idea of diversification, multiple streams of income. So so how I kind of think of my entire portfolio, I've got appreciation from stocks, I get dividends from stocks, I get rental income. I'm writing cover calls on the stocks that I own. I have a franchise. So now I'm doing consulting stuff. So I've got my book, Mud to Millions. I've got consult calls that I do. So for me, all of these kind of create streams of income that allow me to continue to build a portfolio with little to no debt. My ultimate goal is to basically be my own bank and maybe even finance other folks' deals. But that's why I do a bit of everything, because I think the diversification works.
Yeah. I like all that, especially when you start describing at the end, everything that you do pursue, because I think everybody's situation is different. Everybody's story and perspective on certain investments is going to be different. So pretty much you find what works for you, and what you understand is what you invest in. That's definitely a Warren Buffett mentality. I know you say you were studying him a lot. So
sure.
So you said real estate, you said the stocks. I know you said that you cover calls, stuff like that. Things you understand, you're going to invest with it heavily. So I actually want to dive just a little bit into your real estate journey when you first got started, because I really like the story, because I actually heard about it on a previous podcast. But if you can go a little bit into it and tell about how you were acquiring your deals, and I guess the time frame that it took for that.
Yep. So for me, I'm always looking for things that are not a hype. Right. So when everyone's doing something, I'm thinking it's a horrible time to do that. When everyone's running from something, now's the best time to do that. And that's also a Warren Buffettism. When folks are running out of the building, you run in, and vice versa. So so when I started, I bought my first property in 2002. So 18 years ago, I bought my very first property, bought another one in 2004, a third one in 2004. And then I bought another property in 2007, and then sold it subsequently. But I didn't really buy much real estate between 2004 and 2011. So you guys probably remember the economic crisis, the Great Recession of 2008. Things started to really turn south. I kind of watched the market then. People started to sour to real estate right around that time. So, people loved, if you remember how crazy it got in the real estate space between 2005, 6, 7. It was absolutely crazy. Banks were doing these new doc loans. There were condos selling for ridiculous amounts of money down in Miami. And I'm thinking, this is not the time to jump in this cesspool of what is clearly a bubble. So I watched the market drop in 2008. I watched it drop some more in 2009. I watched it in 2010. And I was like, yeah, now is probably about the time to strike. Folks were scared of real estate. Lenders were not lending. Credit dried up quite a bit. And I'm like, all right, now's my time to start aggressively buying real estate. So I think by 2011, I think that was the moment the Philly market bottomed. And I was like, all right, now I'm going to strike. So I went from having maybe 4 properties in 2011. So between 2011 to 2018, I went from 4 to over 30, right? Because I was like, now things are cheap and I want to buy as much as I possibly can. Quite frankly, I should have bought more, especially in those early years between 2011 to 2013, especially. I should have damn near gone bankrupt just buying as much as I possibly could. I mean, I was in Philly buying properties for $5,000, $6,000, $7,000. I mean, it was ridiculously cheap. Now, granted, they needed a lot of work. But what I was doing is I was just in heavy acquisition mode if I couldn't afford to rehab them because I was doing everything cash at that point. I would just put new windows in, a new roof on, make sure that it was getting no further water damage, and I would just board it up and keep it moving. So that was kind of the expectation that I had, that I just wanted to get as much as possible while it was cheap. And then right around 2018, I started noticing that our prices just weren't as reasonable. So I had a minimum expectation, and I was hitting it every time, that if I wasn't going to get at least a 20% cap rate, I didn't want in on the deal. So if I couldn't get a 20 cap, no, thank you. I'll park my money in a mutual fund if I'm going to get less than 20. Mm-hmm. And I could hit that number every single time. So getting closer to 2018, that started to get a little bit more difficult. So I started noticing that Philly was being infiltrated by outside investors. A lot of New York money was flooding into Philly, and they were driving our prices up. So I stopped buying in Philly in 2018. I haven't bought a rental property since 2018. I bought my place in LA at the end of 2018, early 2019, and then I just stopped buying real estate. And then I started focusing more on going back and renovating the projects that I'd bought over the years. I still have 3 buildings left from my splurge of hoarding properties between those years. I've got 3 left that I got to go back and still renovate. And then after that, I'll be fully renovated and hopefully fully occupied. And I do my properties. I take a lot of pride in the product that I put out there. So I stay tenant occupied. I mean, I've got, knock on wood, I've got 0 vacancies right now. So my units that are renovated, none of them are empty because they're great products and I price them well. I say quite a bit on social media to buy the hood, and I believe that there's value and there's gold in the hood. So I also believe that there are amazing people, incredible people in the hood, and they deserve good housing. So I don't throw trash together. I don't knock people over the head with rent prices. I price my properties very fair, if not slightly below market value. So my tenants tend to not leave, and also my tenants tend to come entirely from referrals. So I just had a tenant hit me up a couple of days ago referring another tenant. And I'm like, look, no one's leaving. I had one tenant who told me about a year ago that she was leaving when her lease came up. And 2 weeks later, I guess she looked around and she's like, yeah, can I stay? So, I believe that if you offer good housing at a good price, it's important to me that people are not priced out of the communities that they grew up in. You won't have a problem with rents. And it's interesting that, again, knock on wood, during this entire COVID situation, I had 100% of rents paid for April, 100% of rents paid for May, 100% of rents paid for June. And I've already had a handful of tenants already pay their July rent on June 27th. So I believe that and I do all of my own property management, by the way. I'm a cheap son of a bitch, pardon my French. So I talk to all of my tenants. I handle all of the contractors because in my mind, I believe everything should be reinvested. I see wealth as snowballs that turn snowflakes that turn into snowballs that turn into avalanches. And if you keep reinvesting in that pot, it will eventually get larger and larger and larger over time. So my gross rent roll is about $36,000 a month, and I've got about $5,000 a month in mortgages. So my net rent roll is about $30,000 a month. After mortgages. So it's not technically net because I've got some expenses in there. I reinvest 100% of that in either new acquisitions of new projects, paying contractors for repairs or new rehabs, or paying down the mortgages that I have. So I can focus on providing not only quality products to my tenants. I don't have to worry about a property manager not responding or getting back to my tenants, which is another reason why they stay, and I have very little turnover. And I can be very clear about the type of tenant that I want in my property. So I think in the last, I've been a landlord for a long time, over 15 years. I've been to eviction court maybe 3 times max, because I've got a good relationship with my tenants. I treat them well, and they in turn treat me well in return.
Man, there's so many things I want to comment on in there that I'm not gonna get to comment on everything. But I think the best, I might actually have to go re-listen to this so I can hear everything. But I think one of the, like, your mindset with everything is very strategic, and you're not just doing things just any type of way to say you're doing them, right? Because I'm sure, you know, you talk about like with the DTC, the digital currency stuff, like that was like a hype thing, right? Everybody was getting into it at a certain point, but it was like, I mean, I don't get it, so I'm not going to get into it. I don't care what y'all are doing. That's none of my business. I'm doing it if I understand it. And then too, you know, whenever you're looking, like, especially with the real estate too, because, you know, when it was like at its peak in like, you know, 07, 05 in that time, you know, something that, you know, people always say a lot, and I think this came from the movie. I think I saw it in The Big Short when they were talking about, great movie. And they were talking about how, you know, literally it was a point where like even, you know, waiters and waitresses were saying, I'm about to go get my real estate license, just because it was like that.
It was stupid money. Stupid money. Yeah.
Exactly. And like, you saw that as, whoa, that's a red flag.
Yeah.
Like, this is not the time to be hopping into it, because it's, you pretty much saw what other people couldn't see, which was crazy. I mean, I don't really have much of a perspective on it. I was 11 years old or whatever. But at that time, you know, I'm sure if I had the mindset I have now, it's like, don't y'all see what's going on? Because I kind of see it, like you mentioned 2018. That's when we got into the game. But see, we got into the game when it was so saturated and so hot that it kind of essentially became our normal. So we see it as, oh, I mean, it's kind of what it is. But over the last 2 years, even as it has appreciated, you know, it's even hotter than it was 2 years ago now. And COVID, as we know, hasn't had the impact that people thought it would have, because the supply decreased. You know, the prices has actually, you know, went higher. So
supply and historically low interest rates. Absolutely.
Yeah, exactly. So now I'm starting to see a lot of those common things that were happening in 5. He doesn't want me to talk, I guess.
He's such a jerk. He's such a jerk.
He like, shut up.
No, but you're entirely right. But I will say, it's not easy. You know, it's not easy to look at people. You know, like I'm a money person. So when I remember when Bitcoin was around, and this was either last year or the year before, Bitcoin was like at a crazy number. It was like 18, 19, 20,000. Yeah. And I was sitting here like, damn, y'all making all that money, like, you know. And I was like trying to stick to my principles, but I was looking like, like, you know, I didn't miss a lot of money that I could have made. So I'm not going to say it's easy, but what I was reminded of is, and this predates you guys, but going back to kind of like the mentor in my head, Buffett, back during the .com bubble, like that was back in like the late 90s. People criticized Buffett for not jumping in on all of the, you know, the WorldComs, the tech revolution, right? Mm-hmm. And he kept telling them, like, the numbers don't make sense, you know. And he was like, he's being criticized now, but he was criticized heavily then because they were saying that he was out of touch. Like, you don't know what you're talking about. Like, dude, you've missed out on one of the greatest like revolutions ever. And he said, look, the fundamentals just don't make sense. So for me, when I came and experience is a hell of a teacher, and we all learn very differently. Some people learn better sitting in a classroom. I learned by touching a fire and getting burned. So when I became a licensed broker back in 2000, it took me from like 2000 up until like maybe 2004, 5. It took me getting burned a whole lot of time on kind of gambling with investments to learn that doesn't work. It took me, like, I started to develop my disciplines. I was buying things that just didn't make sense. I got burned in the .com bubble, but like I was buying technology mutual funds. So I took those L's, and I'm glad I did in retrospect, back when I had like $2,000 in the thing, like, I had no money in it. So I'm glad I took those L's because that taught me the disciplines that still stick with me today. So to your point, Alex, I can look at what's happening, what's going on around me, and remember the times that I got burned following the masses, following the herd. Probably the most undisciplined investment that I've purchased in a very long time was this year, back in April. I bought Tesla stock. And the reason I say it was an undisciplined purchase is because I have a very strict philosophy of only investing in companies that have a very low PE ratio, meaning they're you guys know what that means. Yeah, they're profitable. Yeah. And that's not Tesla. So that was the least disciplined investment decision that I've made in a very long time. It happened to be a very profitable one, and I figured it would be because of everything that's happening. So I made quite a bit of money doing that, but I don't even, most people would argue, well, Tesla's not, a very aggressive decision because I'm not a very aggressive investor. But I formulated my disciplines early on, and I religiously, thank God I'm a Taurus, because I religiously stick to them.
Yeah. So real quick too, then going back to what you mentioned earlier in regards to like the, leveraging, because I love this topic of leverage because everybody has a different perspective on it. And we've been on this show where we've brought people on here and we've heard, all types of different perspectives in terms of people that say, I don't know if you're familiar with P.E. Barnes, Ponji Barnes. She talks about, she's in Chicago and she invests in Chicago, but she doesn't own any mortgages on any of her properties. And she has, I think, 15 buildings or something, all mortgage free. And so it's interesting because, I really think, I don't know, there's a bunch of things that go into it because my mentality with leverage is it just depends on where you are in your life at that moment, right? In that particular moment. Because I say I'm a big advocate that, like, obviously, if you're getting into real estate with house hacking, you're going to be getting into that, like, extremely leveraged. You're coming in maybe 97% leverage. If that's probably the lowest you can go unless you're doing a VA, then you 100%. But it's a very, very applicable way to get into the game, and it's a really easy way to scale your properties and your portfolio. Like you can do a house hack every year, whatever you have, 5 properties, all leverage, whatever. Now, and then there's the opposite way, like kind of like people look at it like there's people that won't buy a property until they can have 20% equity at least. And to me, I don't know. I lean more on the leverage side. Obviously, I'm 24 years old. I don't have kids. I don't have a wife. I'm more risk averse. If I'm fine eating apples and potatoes and apple juice and potatoes if I have to, if something happens to me. But, I don't want anyone else having to struggle because of me doing something irresponsible. So I kind of want to get what your thoughts on that were. And because you say you have, 41 buildings and you only have 4 mortgages, which is incredible because a lot of people can say that they are, I'm a real estate mogul, but, how much debt do you have? Because, obviously you look at Grant Cardone, the guy has billions of dollars of real estate. How much debt does he have? I don't judge anybody based on how I invest because it works for everybody. It works differently. And I also don't talk on things that, my net worth isn't up there. So I'm not going to say nothing about that because I don't have those kind of problems. So I kind of want to hear what your perspective on that is.
Great question. And to clarify, so I've got 31 buildings, some of which are single family, some of which are multifamily. So that's where it's either 44 or 45 units come from. So most of my portfolio is single family, but some of them are multis. So here's the thing. I leveraged when I needed to build. So back in 2011, when I started aggressively buying, I didn't have the capital that I have now. So I didn't have the rent roll that I have now. I didn't have my franchise. So I was in a position, I was making 6 figures, but I was still very much like most people who are just trying to grow, build, and scale. So back in 2011, I took out mortgages. What I was very particular about was making sure that I wasn't over leveraged. So I was never financing 97%. Like that didn't sit right with me. So I was, and again, keep in mind, we were in retrospect, back in 2011, I could have very easily financed 97% and I still would have been fine. Yeah. But I didn't know how bad things would get. So I was, what I would do is I would buy, so I had my very first property that I bought back in 2002, I got a HELOC against it, a home equity line of credit. I used that home equity line of credit, it was like 50-some thousand. I used that to buy a property in South Philly, not very far from where I grew up. I used that to buy kind of like the property that really kickstarted what is known today as the BRR, like, I was doing Burr just like everybody else. Yeah. Mm-hmm. I was just doing it and Burr now gets like a really bad rap. You know what I mean? It's kind of like, people are now saying that's a fast way to bankruptcy. And quite frankly, yeah, anything done too aggressively, there's certainly a risk. But my philosophy, so I bought this property, paid $56,000 for the very first one that I bought. I used some cash out of pocket. I renovated it. It was a cosmetic reno. I renovated it with cash out of pocket. The property then appraised for about $100,000. All I did was I took my investment back out of it. So I financed, 60% or so. I was still very conservative. Now, today, actually a year ago, the property that shares a party wall. So Philly is mostly row houses, meaning we share walls. We're all over each other. The property that shares a party wall with this building sold for $450,000 about a year ago. So in retrospect, I could have been like, look, run me, if it's worth 100,000, low key appraise it for 150 and run me, 100, 125. Like in retrospect, I could have taken a ton of money out of that building because we were at the bottom of the market. But for me, I'm always thinking I need to be more conservative because in watching people, here's what I know to be true. In watching investors, folks that are highly leveraged, I've seen them lose that game. I've seen them go through bankruptcy. I've seen, folks that are organizations. I think I just saw something today that said that Blackstone is now 30 days delinquent on like $237 million worth of debt. Like you're Blackstone and you ain't paying your mortgages. Like I'm Ayesha Selden, like small investor, and I'm paying my mortgages, right? So I've seen that game go very badly. I've never seen, like the woman that you mentioned, who I've never heard of in Chicago. I've never seen an investor who has no debt on their properties lose them. So I'm like, again, I'm very simple. I'm no rocket scientist. Like, when I see low leverage, they typically don't lose. High leverage, they typically lose. Doesn't take a whole lot for me to then formulate an opinion and strategy based on just that. Mm-hmm. So I have to sleep at night. And I also think that women investors just tend to be a little bit more conservative. Quite frankly, had I gone entirely ham in 2011, which in retrospect, Monday morning quarterback, I should have gone ham. I mean, I should have look, give me all the money you can possibly give me and bought more in 2011. I would have been a lot richer than I am today, but I need to be able to sleep at night. Yeah. I need to be able to it's also why I'm willing to do my own property management so that I can take that extra 10%. I mean, today I would be spending $3,500 a month ish, $3,600 a month. If a property manager was charging me 10%, I'd be paying $3,600 a month to someone when I could, hell, that's my mortgage in LA. I could take that money and use that to pay down my mortgages faster, pay contractors. I can use that for whatever. I'd rather reinvest that back in me than have a ton of mortgages. So I've spent the last few years making sure that I could bang down. At one point I had 9, 10 mortgages. I had a lot of debt. But when my rent roll picked up, I was very cognizant about making sure that I paid those loans down. Because that to me is just a bit scary.
Mm-hmm. Right. Yeah, what I'm learning is that the experience is the best teacher. So, by the things that you've seen and the things that you've experienced personally, that has shaped the way that you approach investing now. Especially approaching leverage. I know back then you said in 2011 you were using the BIRD strategy. I just wanted, for anybody who doesn't understand what that is, it's an acronym with B and 4 R's: buy, rehab, rent, refinance, repeat. And that's sort of just a leverage strategy that real estate investors use in order to purchase a property for a low down, rehab the property probably with money out of pocket, and then when it appraises for high enough, and I think in your case, I forgot the exact numbers on it, but let's just say that you are all in for $75,000 and it appraises for $100,000. So you can go to the bank and say, I want to get a 75% ARV loan, meaning that the after repair value of the house, the current value of the house is $100,000. So I want to finance it 75%. So now you are 75% leveraged on that home. And I guess the beauty thing of that is that now you take that $75,000 out, which is the money that you invested, and go continue to invest it, and just go redo that entire strategy. That's what the repeat is at the very end. Repeat it with another property. So I just want to recap that. But I guess in your case, you're saying that that's a good strategy, especially if it appraises for real high. You can just keep on. You said you could if it could have appraised for 125 or 150, you could have took out even more. Problem is that if you get it too over leveraged and then you say you can't rent it out, and you just go through a dry spell, it can come back to really bite you in the butt. Yep. And I know you were saying looking back on it, you could have done it back then, but at the time you just don't know. Hindsight is always 20/20. You can always look back and be like, Absolutely. I should have been doing this back then, but at the time you really don't know that. So you just pretty much take your best judgment and go based off what you know and your experiences to shape how you approach any investment in general.
Absolutely, Marlon, because here's how I think about it. I always think what can happen in a worst case scenario, in a black swan event like COVID-19. this is one of those worst case scenario markets. You've got high unemployment. We've already seen rents starting to drop, especially in expensive markets. So I think I read an article the other day that said that in San Francisco, for example, rents have already started dropping in New York. So we see, like, if unemployment skyrockets, how are people going to pay their bills? So in my mind, I start thinking, one, if supply goes up, which is certainly a way that rents can drop. I mean, if you've got a huge excess amount of supply or inventory that floods a market, that could be flips that can no longer sell because banks stop lending and people can't buy. So if you had a whole bunch of flips that were under construction and suddenly they become rentals, that can be a huge disadvantage for existing landlords. If that happens simultaneously with an event like this, where suddenly Airbnbs now suddenly become long-term rentals, and that floods your market. I mean, there are a variety of different things that can drop rent in a market. So my biggest concern is always, if I was getting $1,200 a month before, and my mortgage is, and people like, their margins are such trash on their deals because they overpaid or they took out too much money. If my rent is $1,200 and my mortgage is like $1,000, and suddenly, just to be competitive, I've got to drop my rents to $1,000 or whatever. Anything that breaks, I'm in the hole. Or if I got to drop my rents to $900, I'm in a hole $100 a month, which doesn't seem like a lot. But if I did that times 30 or times 40, it's game over. So for me, I'm always very cognizant of making sure that, all right, in a worst case scenario, if I've got to drop rents $100, $150, $200 a month, will I still be okay? I mean, quite frankly, with the mortgages that I have now, I sleep well at night knowing that literally every single one of my tenants could not pay rent, and I'd be okay.
Yeah.
That to me is peace of mind. I mean, I was doing BRRRR, the strategy we talked about, before I even knew there was a term for it. It just made sense to me. But how it made sense to me was, I want my mortgage to be as low as possible, so that if I have to drop my rents, I'm not in trouble.
I love that strategy. I just want to comment on that, because you're pretty much planning for the worst case scenario rather than just expecting times to always be great.
Always. I'm always planning for worst case scenario. And I'm always, and I also know that I prefer to keep my rents at market value or slightly below, just because I think that you'll get a greater tenant pool of applicants. Yeah. I mean, I don't want like one raggedy person that applied and I've got to take them because, and they may have evictions or whatever, but they were the only one person that applied because I was too high above fair market value. So I could very easily charge more for the properties that I have, but I don't, because I want good tenants, which is why y'all don't see me down there in eviction court every month with, half the other landlords, because, like, no shit, Sherlock, you're way overcharged, and you had one person applied and they had like 9 evictions already, and you were just desperate because you needed first last security.
Yeah. And the reason I really love this too is because, well, first of all, the reason I love real estate in obviously, there's multiple wealth, creators in real estate. Obviously you have the appreciation, the cash flow, the tax benefits, in terms of the depreciation and the write-offs and all of that. And then you have the leverage, that part too. But the best thing for me about real estate is the control aspect of real estate, right? As opposed to other investment vehicles that you kind of might have less control over. But what you are doing with real estate essentially is you're taking what it already, has, and you're even providing yourself even more control now. Because now essentially, if you are, not leveraged on anything, you control everything that goes on. In terms of like the finances and in any worst case scenario, you're able to, there's no outside circumstance that can say, oh, you got to give up this property or you lose this property now, because you already prepared for that situation, which is a very interesting way. And I really love that way to do it. And especially too, even it goes further when you talk about how you even find your tenants and pick your tenants, because now there's a guy, he was on Bigger Pockets podcast. He was talking about, his name was Joe Asamoah. I'm not sure if you're familiar with him, but he's like
the only pockets I recognize are Blacker Pockets. I don't know nothing about Bigger Pockets.
My fault.
But continue.
Yeah, the dude on there though, he is black though. That's why I listen to it.
Okay, good. And that's actually good to hear, because there's not very. When I've looked at Bigger Pockets in the past, I have not seen. Not only have I not seen very many of us, but the folks that are on there, I haven't heard very good stories about investing in our neighborhoods, which is why I don't even. But
Makes
yeah.
perfect.
Yeah. That's I agree 100%. That's why I said I had to say the guy is black. That's why I mentioned that. But one thing he's big on too is controlling everything in terms of like tenant screening and all of those things, because what he does is he even like goes to his tenants houses to see how they're living before he even allows them into the house. But I say that to say like the way he's screening tenants and the way he's like putting people on there, that even gives you more control, because one of the things about real estate that you have least control over is what your tenants are going to do, right? Yep. And the better tenant you put in there, the more control you will have in that sense, to where at least if anything goes wrong, then it's not going to be a fool. So.
Alex, that's a great point. I mean, and that's a part of the reason why I put out a great product. I mean, most of my properties are entire gut job renos. I mean, I'll go into a property that looks like, we don't really need it, and suddenly it's like rip everything out, take the roof off, take everything out. I'm doing everything: new plumbing, new HVAC, new electric, new everything. So I put out a quality product, and I put it at like a damn good price. I mean, it's not $700 a month. I mean, I'm not like way undercutting it, because obviously I have to make a return, but I still will price it below what comparable properties are. So my tenant applicant pool, I mean, I've literally been to a showing, and I'll have like people that are there fighting over the property. Like, well, I was here first. Like, so I make sure that I price it very well, so that like my applicant pool, I get a ton of applications, and I can be very selective about, who I choose. Like, how many evictions have you had? How many, let me see your credit. Like, let me see your, I don't even so much care about credit. Let me see your income. Yeah. So, I feel like most folks, because they're not putting out a quality product, and I have a huge issue with slumlords in the hood, but that's a whole separate story. But if you put out a quality product and make sure that your properties are priced fairly, you won't have a lot of the issues that a lot of landlords deal with.
You're able to like put out these good products just in real estate because of how you were making money when you bought the property. Like, you bought these properties when they were at a steep discount, so you can do full gut renovations and still be able to make a profit at the end of the day. And so I know that one of your properties that you had, you've been publicizing on Instagram, is your property, Bucktooth. Yep. Oh yeah,
Bucktooth. But Bucktooth put me through a ringer. Bucktooth was probably, in Philly at least, the most challenging single family property that I had done to date. Ended up sinking a ton of money into it, but at the same time, it still ended up. We rented it during COVID for $1,800 a month, and it still has probably $150,000 or so worth of equity in it. I mean, it's still a great investment. But again, I bought it correctly. I paid a good number for it. So I believe, and I'm glad you brought that up, Marlon. I believe that your money is made at acquisition. If you buy right, and I tend to not get into the middle of bidding wars. I don't if y'all can have it. I'm not going to fight you on this deal, and I'm not going to keep escalating. Because that's where you run into problems later. Folks, particularly folks who need a very quick exit strategy. Bidding wars is a very fast and easy way to lose that battle.
Yeah.
Yep, definitely.
Yeah. And that's where you can have more control too on the buy end. You can't really control the refinance or the sell end as much as you like. Cool. So cool. I want to kind of transition into like a little bit more so of the mindset kind of stuff too, because we love talking about mindset in terms of like what it takes to actually be on this journey to financial freedom. So the first thing I do want to talk about is obviously I think one of the most controversial tweets of 2019 that you had, not because it was like controversial because of anything you said, but because of how it was perceived by people. And I'm sure you already know what I'm talking about, but it was the tweet. I think it was out like last December. And you had mentioned, you said, I sacrificed my 20s to build the foundation of long-term wealth. I worked 60 to 80 hours a week, saved and invested. Folks said I would regret it. I'm 41 and it can buy almost anything I want. Still waiting for that regret to kick in. Now, before you comment on this, I do want to read some of the replies to this tweet. And have put this tweet out. I have pulled up.
You got receipts. Right.
Yes. I want to read some of them and then kind of get your opinion on, what you were saying, and then also the perception and the reaction of it. Because if people don't know, this tweet it blew up big, and it got big at the end of the year. And a lot of people were talking about it. And I was debating a lot of my friends too with it too. But
Alex, before you read those, it's this tweet is interesting because I wasn't even on Twitter very much at the time. So I think I just gotten back on Twitter like October, November. The very first week of December, I was driving down to Richmond, Virginia, doing client meetings, and the thought just kind of came to me as I was driving. So I'm driving down to Richmond, stopped at a rest stop, tweeted this just because it kind of came to me, just thinking of the flexibility and freedom that I have. I hadn't worked very much the month prior. And I was driving down to Virginia to do a week of meetings, which I do the first week of December every year. And as I was driving, I'm getting a lot of comments on this thing because I wasn't even on Twitter very much. I was mostly on Instagram, and I'm then Twitter had given me a notification if you want to mute this, if you want to Twitter, it was a pop-up that was just just so you're aware, you can mute your notifications to only people that follow you and I was all right, I guess. I didn't even know how this thing worked. And by the time I'd actually gotten to Richmond, this thing had gone absolutely crazy. I was arguing with people, because and my thought process behind it, and I'll let you kind of read some of the reactions, and I've seen a lot of the responses to it. My thought process wasn't this is for everyone. It's not this is what worked for me. This is what it doesn't work for everyone. Grind culture is not for everyone. Grind culture is not even for everyone who's successful. I like working. I enjoy work. I also like the opportunity or the ability or the flexibility to not have to tell anyone I'm going to Italy this week, and I'm gonna just be there. I'll work on a boat if I want to, and I can do that at 41, or now I'm 42. I can do that. But people kind of had a visceral reaction to that tweet. I mean, people they got all in their feelings about it. So I'll let you.
No, people was in their feelings. Even some people I sent it to, they was in their feelings. But I think people didn't understand what you had said, because first thing, I'll read some of these and then I'll kind of say this. But someone said, life isn't all about being able to buy anything you want. What memories do you miss out on by working 60 to 80 hours a week? What's your health looking like, mental and physical? Because both sleep and rest is important. That's one. Someone said, this one's funny. Real estate mogul Twitter loves this flex. If it worked for her, so be it. However, it's almost predatory to offer these sorts of success stories without caveats. People know what audience they're speaking to. And then one more that happened at, where is it at? Oh, here it is. I work about 30 hours a week and pulled down 6 figures this year. For me, it's about working smart, not all the time, and not for everyone. Burning out doesn't help the bottom line. Now, what I had got from this whole thing, kind of that came out of it, was for the first thing I said that people, I think, misconstrued it in a way that they didn't really realize that when you say you were working, and this is how I perceive it, they said when you were working 60 to 80 hours a week, a lot of those hours, I presume, weren't for somebody else. They were for yourself and for your own business, correct?
So the business that I was working on then is the franchise I own today. So, a lot of people, I guess, assumed, I'm sorry, there's a motorcycle thing, party or something going on outside. I'm in downtown Philly. So, most people assumed that, I don't know, maybe that I was working for someone else, or that I was sitting in a cubicle, building someone else's business. No, the 60 to 80 hours a week that I was working was on building my business.
Yes.
And that business today is worth a nice few million bucks. So I think it was time well spent. It also gives me and affords me the flexibility and freedom to do a lot of the real estate that I do, to be able to do what I want to do. I don't have to answer to anyone. I now have the opportunity to hire and employ people in our community, which that to me means probably more than anything. So I think that people, there was one woman who said, because people I'll still see a big page occasionally post that. Yeah. And someone's response to it was where's her family? Where's her kids? Where, she ain't got nothing, but good luck with that. And I glanced at her page and some, I kind of got in my feelings a little bit, because I looked at her page and she was talking about going to the Olive Garden.
I saw you reply to this.
You saw, yeah. I'm like, well, you're at the Olive Garden. I'm in the Amalfi Coast, actually in Italy.
Well, let's be nice. Yeah. Let's be nice. We don't have to go there. I mean, you're not wrong, but you didn't have to say it. I mean, good Lord.
When I want Italian, it's a totally different. And that was an asshole move. I was being an asshole, and I should not have responded that way.
That's right.
But at the same time, different strokes for different folks. There are different things that are important to different people. Me as a kid, what was important to me was very different than what's important to someone else. For me, having flexibility, having freedom, and people talk about everything in balance. To me, working hard early, and now I can do whatever it is I want. That to me was balance. Yeah. I basically sacrificed my 20s. In my 30s and 40s, and now I do what I want when I want. That to me was my idea of balance.
Yeah.
So for the folks who how's my health, I'm good. I'm healthy. I make sure that I exercise regularly. I did the vegan thing for a couple of years. I'm mentally I'm in a great place, and I'm glad, I'm happy, and I don't regret the decisions that I made. And I say all that to say, folks have to make choices and decisions to do what works for them, because not everything is for everyone. And I'm glad, Alex, that you mentioned that you wanted to talk about the mindset piece, because that's probably my favorite conversation as it pertains to wealth building. I wrote an entire book, Mud to Millions, which people I think thought would be a real estate book or a stock book, but it was really about just mindset, because I believe that mindset is the genesis of wealth creation. So how we think about money, how we think about how we handle our finances, that is the very beginning and most integral part of going from, the mud, which is where I was, nothing, to being a millionaire by the time I was 30. Mm-hmm. So, but that ain't for everybody. Working hard, grinding hard, that's not for everybody. It was for me. And I don't regret one step of it, but
yeah. And I really resonate with that too, because that's the reason whenever I saw that tweet, I was like, man, I love this tweet. It was at the end of the year, and I was like, this is my favorite tweet of the year, because the mindset that comes with it, like you said, it's not for everyone, but if it is for you, man, the opportunities that it can create, because we talk about all the time, you just sacrifice right now these years, and the rest of your 60 years are going to be amazing.
Yep.
And for us, it's not even a sacrifice because it feels normal. So it doesn't feel like a sacrifice. Like me, working from 6 p.m. to 2 a.m. on my business after getting off of work, or going to the gym and you come and work on your business. That's normal for me. That's what I want to do. I enjoy doing it. And so for me, the fruits of that too will be, the fruits of what the labor I put in. So I'm not worried about it. But I do have this theory though because when I saw this, it kind of made me think. I had this theory that when somebody sees someone else that kind of achieves success and they came from modest upbringings, they kind of did, and it's not somebody that's famous, so they can't really it's not someone that is widely known. They have to kind of be opposed to it and antagonize it, because you're essentially showing them that they could have did this with their life kind of in a way. And so it almost is that cognitive dissonance kind of thing that's going on in their mind, because now it's dang, well, I didn't do that, but deep down they know, okay, someone that came from modest, humble beginnings is wealthy now, and I came from those same beginnings. I didn't do this, so it's okay, so it's and at the same time, most people, if we're being honest, most people in the world are lazy. Inherently, people are lazy, most people, and they don't want to necessarily sacrifice in a way. Not saying everybody, but generally speaking, that's generally how most people the natural thing is to do the easy thing. And that's just human behavior. Nobody wants to sacrifice. And on top of that, nobody really believes in themselves too, because I promise you, if God, let's just say God, if he told you that in 10 years you will be a millionaire, all you have to do is sacrifice, your 20s or whatever, more people will do it because they know that it's gonna be there. They know for sure, but they just don't believe in themselves in that way. So that's kind of what I got from it, and so I really commend you on that. And just because it's crazy because this method actually, what you did, it shows that it actually works.
Yep.
So shout out.
Alex, it's interesting because people kind of just watching and listening to, and some of them I just didn't comment on, and it was just really fascinating for me to kind of see the reactions. And I feel like particularly when a Black woman says it, when a Black woman says hustle hard and this is what you get as a result, or here's what I've been able to do as a result of this, and here's what I came from. If a guy like Gary Vee says it, it's well received. Right. So a Gary Vee, who those of you who are watching this and don't know, look him up. But he's a white guy who basically talks about like a lot of this same stuff, like go hustle to make it happen. It is widely and well received when a guy like that says it. But when a Black woman especially says it, it's almost taken as like a personal attack. And, it certainly wasn't meant to attack anyone, but more so to show like it's possible. And regardless of your age, I mean, whether you're 20, 30, 40, 50, like you can still say, all right, here's what I'm going to focus on. Here's what I'm going to make important. And then here are the actions that I'm going to back up as a result of what my end game or my end goal is. But it hurts when you say these things and people take it as such a personal attack to them, when it certainly wasn't meant that way. And like whether or not you want to take my path or go about it some other way is totally fine. But it certainly hits different when it comes from a Black woman. I mean, a Black male, Black men as well. But I don't see people attacking Gary Vee and others like him. We're saying the exact same message, which is interesting to say the least.
That's a great point, though. And I wanted to point out, like, this tweet right here, this is what we were talking about in the beginning before we started recording this. I know I told you that we saw a tweet that you put out, and that's what inspired us, like, want to get you on the podcast. So Alex said this was back in, like, December of last year where we had saw this tweet first come out. He had sent it to me, and I'm like, I literally texted him and said, bro, we're going to get her on the podcast one day. And and just keep in mind, we probably had 500 followers at the time. So it's like, okay, I mean, all right, cool. Sounds good. We'll see. So to see that come to fruition is pretty cool. But I think people just don't realize, cause I know you, in the tweet you said, I'm 41 and I can buy almost anything I want. So people's responses are along the lines of, well, you sacrificed your best years of your life. You sacrificed your 20s. I don't think people understand how young you really are at age 40. Because if you're in the workforce, you literally have 25 more years until you retire. Me and Alex aren't even 25 ourselves. That means we have more life. Like, it's going to take longer than what we've lived our entire life for you to reach retirement age and then go enjoy the quote unquote fruits of your labor. Like 40 is a very young age to be fully retired, fully financially free and be able to do whatever you want, whenever you want. I think that's one thing people really need to understand about like, especially when you about the age, because I think people keep on talking about these 20s are just so sacred. Like, you're still young and have plenty of energy and want to still see the world and everything like that. And
Marlon, not only that, but I still got to do stuff in my 20s. I mean, exactly. I saw Italy for the first time in my 20s. I traveled quite a bit internationally in my 20s. So it's not like I didn't do anything. And quite frankly, I wrote that tweet and said 41 because I happened to be 41 in December of 2019 when I tweeted it. But that I can pretty much buy anything I want was true much earlier than 41. And to your point, 41 is still very, very young. I mean, from a life expectancy standpoint, you're only like halfway through the race. So I still very much was able to do what I wanted prior to the age that I happened to be when I tweeted that. And I also still had some fun in my 40s, but I mean in my 20s, sorry. Right. But I also made a very concerted effort to sacrifice and do all the stuff that I needed to get done in my 20s. And I wouldn't do anything different. But again, my values are just, we don't all value the same stuff. I value in my 30s and 40s having flexibility, freedom, time, wealth, and all that stuff. That's not at the top of everyone's list, and that's okay.
Yeah.
Right. And I wanted to comment on what Alex had said earlier, because you were saying how somebody coming from modest beginnings and then achieving success and then putting something out like this, it's like a call to action for people. And people don't like to see that somebody else is able to do something that they could have done themselves, because that's like almost a call to action to them to change their normal or change themselves. And people don't like to feel that way, so they rather just attack the person saying it. And oftentimes they want you to come back down to where they are, so they don't have to try to elevate their own self.
Sure.
And I think that's sort of what we were seeing there.
And I forget which one of you said it, but I just like working. I was in Greece last year with my sister and a friend of ours, and I'm totally cool. Like I can be chilling on like a balcony overlooking the ocean and working. Like I'm and my sister and our friend are looking at like, why are you doing? Because this is cool for me. Like I want to get some work done. Like I can be here. I can be like, kind of overlooking things that like most people in their lifetimes will never get to see. Yeah. And I enjoy work.
Mm-hmm. And the one last thing I want to just comment on too about the whole thing too is that it kind of like, because I don't know how to say this, but like everybody has this perception of kind of what wealth is in terms of like how it's based off of like what you see in the media and just what growing up. Most people don't know the fact that you can actually become wealthy by not becoming, famous. You don't have to become like an entertainer or
a player.
You ain't got to hold a ball, or you ain't got to, have mad rap skills or whatever the case may be. You could become wealthy if you literally just do things. Like I look at it like it's kind of like the scientific method kind of for building wealth, because we all learn like about the scientific method or whatever in 5th grade or whatever. You have like make an observation, ask a question, the hypothesis, you make the prediction, and then you test the prediction, right? And the way I kind of look at it is like, because I'll just explain in that message. So I make the observation as like, okay, a lot of people have actually built, and this is kind of how I actually, when we turned like January 2018, when we decided to go on this path, this is what happened for me, subliminally, like subconscious.
What? Bro, what are you talking about, man?
That's a tough one. Yeah. I stay away from that word. Yeah.
Yeah. Like it happened to me. Like I saw like, wait, okay, I made an observation. A lot of people have actually built wealth, unorthodoxly. The only reason I say unorthodox in quotes is because you don't see it this way. Mm-hmm. You see it the other way. But a lot of people have actually built wealth doing what you have done and became extremely wealthy doing things that you have done. So I said, okay, step 2 of the scientific method, ask a question. How can I do the same? Okay, so I form a hypothesis based off of that. If I sacrifice now in my 20s and I buy assets and not liabilities, I will become wealthy at some point, right? That's my hypothesis. Now I make a prediction based off of that hypothesis. Okay, based off of that hypothesis, I will be financially free by age 28. Now I test that prediction by saying, okay, well, actually right now, currently it's in the works. So, we're on pace to have that by age 26. So I kind of look at that like, what you tweeted was like the epitome of what that is. Like that is the way to build wealth. That's how I looked at it. So that was the perspective I got from it. And whenever you tweeted it, I was just really happy about it, because it's like, man, it just shows like what you're doing is like, or what we were doing was like the right thing to be doing, and like we're doing it the right way. So I don't know. That's just what I felt about that.
But Alex, and all of those are very good and valid points. And one of the things that you just said that stood out to me the most is that you can build wealth without being a ball player, entertain, and statistically, you won't be a ball player or an actress or an act like statistically that won't happen for you. Most of us that are Black that have figured out how to beat the system and become millionaires from poverty do it through business and asset ownership. Yeah. Through building a business, through making the sacrifices to invest in real estate, stocks, businesses, whatever it is that we get into. So, that's what my mission is. My mission is to normalize people who look like you guys, look like me, And that's a part of the reason why I'm so vocal about it on social media. You know, I mean, Philly's a very gritty city. Like, you know, people, a lot of investors in Philly who are doing quite well are very silent about it because they're like, no, they ain't gonna take me out. They ain't gonna shoot me. They ain't gonna rob me. They ain't gonna, you know, ain't no home invasion's gonna be okay. So most people are kind of silent about it because of, you know, a variety of different safety issues. I'm vocal about it because I want to normalize Black wealth. Because there's a lot of us. I mean, we're out here and we're making it happen and we're doing it. And my entire mission is to normalize Black wealth and to talk to people and teach people that they can do it too. Because there's nothing super special or super brilliant about me other than the fact that I was loved unconditionally as a kid. There's nothing super special about me otherwise. You know, it's interesting because going back to that tweet earlier, one of the things that, and I forget which one of you guys said it, but, you know, people did try to like wrap their heads around like all the reasons why I was able to be successful and they're not, right? So one of the as I was like driving down to Virginia, I stopped at another rest stop and people were like, you know, one of the questions that someone asked me was, did you go to college? So the tweet came out, somebody asked, did you go to college? And I said, yes, I went to college. And not only did I go to college, my tuition was free.
Yeah.
And that was a sticking point for people. That was the oh bitch, that's how you did it. That's right. Like, oh, your tuition was free, bitch. Nah, that's how you made it. Like, that's why the rest of us can't make it. Now, never mind. And then I started seeing stuff on Instagram. It was on there's the Jasmine brand. The Jasmine brand posted it, and I was reading through some of the comments, and somebody said something like, her mom is a professor at an Ivy League college, which is how, like, I'm like, wait, what the hell? No, my mom's a nurse at Temple. Like, you know, in Temple, I don't, like, last I checked, was not an Ivy League school. So people tried to, like, rationalize, like, oh, you can get, and I get it. I get college is super expensive today. Most people didn't even take into consideration that back in 1996, when I went to Temple University, which was not a very good school at the time. I mean, it's got a better reputation today, but my entire college tuition was like 20 grand. Like that was all Temple costs for a 4-year education back then. So even if I had to pay for school, like I still would be in the same position today. And most people just tried to like rationalize, oh, because your mom was a college professor at an Ivy League college, that's why you went to Harvard. So that's clearly like, no, none of that actually happened. One guy told me, like, unless I was born in like a third world country, I don't know, like I'm privileged. Like, I mean, he fled, like, that was one of the comments that I got to that tweet. Like, sis, you were born in America, you're privileged, like, get over it. So, I mean, there's a million different ways that we can rationalize it. And he may very much have a valid point. I had a working toilet. I did. Like, I don't know the struggles that that a lot of people know or face. And I say that if anything, the privilege that I had was, and I've kind of gotten away from that self-made term because I did have a privilege. I was loved unconditionally. That is a privilege. So, you know, it's interesting the dynamics of all of this. It's interesting the responses that I got to just talking about here's what worked for me. But, you know, again, that was what worked for me. That's not necessarily what would work for everybody. Some people that message resonated with. Some people are like, you know, screw you, hag. Like, you know, your Harvard mom and, you know, all your privilege. And that's cool too. I'm not for everybody.
I'm glad you mentioned about the privilege too, because that is, you know, that concept is actually, I was thinking about the self-made, and this is the last thing I'm gonna say before we go to the Fast Five to wrap up the show. But I was thinking about the privilege thing too recently, because I always think like in terms of like, or the self-made thing too, because most people, like, there's like some underlying, you know, thing that happened that actually like gave them some sort of privilege in a way. And I always think about that now, because for me, I was born in Kenya and my parents came over here when I was 1 year old, and they brought me over here when I was 1 year old. But I always think, like, I know because my dad came over here, he struggled a lot to like acclimate to the culture here. And I always think, man, if they decided, man, I just don't want to do this. They just wanted to give us a better life. But if they decided they didn't want to do that, my life would be 180 degrees right now. Like literally, it would be so much different. So I always think about that too. And I think about, that is my privilege. So I could never say that I was self-made too, in a way of whatever I accomplished. I could never say that.
I mean, it's before we get into the Fast Five, Alex, like, you know, I think a lot of us have those stories. I mean, I was at 16 setting up, and I talk a little bit about this. I've talked about this on some podcasts, but and I've tweeted a little bit about this. I was like on a fast track route because, again, I've always been very money motivated. So when you take a 16-year-old who's money motivated and lives in the hood, what we saw as wealth was hood money, and hood money, there were drug dealers. Mm-hmm. So at 16, I was on a fast track. I was actually like working out the details of selling drugs with a friend of mine. So I was going to like come up with the money. She was going to sell it in her school. And if it wasn't for, like, my mom literally came into my bedroom one night and was like, I don't know, whatever you're thinking about doing, don't do it. Like, I don't know what's going on. Like, I don't know. I'm not a very religious person, but I'm 99% positive my mom and God had like intimate conversations, and he straight up ratted on me. So when she came in my room, like, I don't know, whatever it is you're thinking about doing, don't do it. And I knew what I was thinking about. I'm like, well, what you talking about? Like, you know, go on now, go about your business. I realized, and don't take for granted, how different my life could have been, how different things could have turned out for me. So I think we all, and again, that's why, like, you know, when I act like, am I self-made? Yeah, like, you know, I was fortunate enough to have that type of parenting, you know, and most could argue that, like, I'm not the idea or the definition of privilege. I mean, I grew up single mom who was 19 when she had me, no dad present. I don't know if that N-word is alive or dead today. You know, so there, it's certainly not the definition of what we call privilege, but at the same time, I still had a lot more than, Alex, to your point, I had a lot more than most. I was given more opportunities than most. Mm-hmm. So, yeah. So I don't take that for granted.
Facts. It's huge. Yeah. Cool. Marlon, do you have anything else real quick before we hop into it?
No, but I think just for anybody, that everybody can find some type of unfair advantage that they have, and it's really just about being able to realize it. So your circumstances, everybody's going to be different, but that doesn't mean that anybody is any less capable of achieving, especially not in this day and age where everything is readily accessible through the internet. I think everybody does have I'm not going to say everybody has the exact same playing field, but the playing field is even a little bit more now because of the resources that we have in America today.
Cool. So, we'll just hop into the Fast Five. So the Fast Five is essentially, you know, we ask you 5 questions, you answer them in 60 seconds or less. Pretty simple. And we'll close out the show with that. Cool. So I'll take the first one, and then Marlon, you will take the next one. We'll alternate. So first question is, what does success mean to you?
Freedom.
That's it.
There you go. Question number 2. What's your favorite money or business book?
Probably The Intelligent Investor. You know what? I've got to also point out, 7 Habits of Highly Effective People was probably they're close.
That's close the one book, right?
No, that 7 Habits is Covey.
Oh yeah, Stephen, yeah, that guy, yeah.
Yep.
Okay. And by the way, too, y'all gotta check out her book Mud to Millions
for sure.
I didn't even think about. I thought of those legends. I didn't think about book. Yes, I do have a book, Mud to Millions, which I did entirely like in house. Like I didn't want it all on what's the new popular Gumroads? Like yeah, we're gonna do everything in house. So it's Mud 2 Millions, number 2, Mud 2 Millions with an S on the end.com. But yeah, it's a pretty good mindset book.
Yeah, I love that. I'm definitely probably gonna buy it today.
Sure.
I meant to get it before so we could talk about it, but got busy. So next question, would you rather have $1,000 a week for life or $1 million today?
$1,000 a week for life. So what is that, 52 grand a year versus $1 million? That's 5.2%. Give me $1 million.
2 plus 3 plus 7 equal altitude of trapezoid divided by equilibrial triangle is a hypotenuse of 2x plus 7.
Stick to your rules. I swear, that's good.
You know, I can beat that return all day long.
Question number 4. If you could go back and change anything about your journey, what would it be?
I mean, Monday morning quarterback's easy to do. I would have put more money in Apple. I would have invested more in South Philly real estate in 2011 all day. And I would still have my childhood home in South Philly that my family sold.
Oh yeah, true that.
Yeah.
Talking about earlier. Yep.
Yeah.
Cool. So final question, where can people find out more about you?
On the socials. So I'm on Instagram and Twitter, both as my name, Ayesha Selden, and yeah, I mean I've got a website, my Mud to Millions book, and all that stuff. So AYESHASELDEN. Hopefully you guys put that up there. But yeah, I'm usually on Instagram and Twitter.
Cool. This was a super dope episode, man. I loved. And this was pretty much everything I wanted it to be whenever I and Marlon too, whenever we first seen you. It was like, man, that's gonna be an amazing conversation. We were just already imagining it. So it was super dope to have this, come to fruition and kind of, hear your mindset. I love your mindset. I love what you're doing. You are definitely changing the culture and moving the culture forward. So we appreciate the work you're putting in and what you're doing and, all of this. So shout out to you for that and just keep doing what you're doing.
Cool. Thanks, guys. I had a blast. Thank you so much for having me.
Wow, great episode. I thoroughly enjoyed that one, man. That was one of my favorite episodes that we've done in terms of like the conversation that we've had about, I don't know, we talk a lot about mindset, but that was definitely one of my favorite mindset conversations because it was, the reason I really loved, her story was because, like I said in the episode, man, it solidifies that like this is the tried and true way to build wealth that's quote unquote unorthodox. A lot of people don't, see people build wealth like this or become wealthy like this because they aren't famous, because they don't, have any, whatever you call it, clout or whatever you want to call it. But dude, I'd much rather have assets and, that financial freedom than any type of fame and clout, because that don't translate to nothing that, well, in most cases, they don't translate to, I mean, it can, but in most cases, it doesn't translate to anything. So I really loved how she, built her wealth and how she, literally came from mud to millions, like, the name of her book. And especially when she was, talking about, the sacrifices she made and how it was like not even a sacrifice for her. That's like one thing that I really, resonated with too, because that's how I feel in a lot of cases. Like this journey, like a lot of people look at it as like, man, that it's so much, they work so hard or whatever. And it's like, yeah, it's hard work, but at the same time, it's enjoyable. I enjoy, working on real estate, finding real estate deals, working on the truck and stuff, working on all this stuff, because I know what it's gonna bring. Even the times when it's trash, I know it's gonna be good. As in the future, it's just sticking to it. So
yeah, I mean, just following exactly what the path you were talking about, just her story that she was given about, like, the tweet that she had posted in general, talking about how she spent her 20s grinding. And I'm glad she pointed out that she wasn't just in the books or just like building her business 24/7. Like, she was still able to enjoy her 20s while not just splurging like everybody else is or trying to keep up with the Joneses during their 20s and then having to make up for that in their 30s and 40s and 50s by going to their job and just trying to pay for all the time that they could have been spending building up some type of legacy or building up generational wealth. So, and I really like that she's vocal about it and that she's trying to put herself as an image for people to look at and be like, there's a black woman who retired, or not retired, but who became financially free before the age of 40. And it came from modest beginnings, from mud to millions. Like, she's able to exemplify that this is a possibility for people. Like, I think people always need somebody that they can look up to and see that, okay, this is something that's obtainable for me as well. Because just how, when I was growing up back in Detroit, the only people that you're gonna see that's successful that look like you are gonna be rappers, drug dealers, and star athletes. So that's all you try to attain for yourself, because that's all you see. If you can see somebody like Ayesha that is making a killing just through stocks and real estate and able to become financially free at an early age, now you have a new perspective to look up to. And I think that's one thing that's the epitome of what this podcast is about. We're using ourselves as examples, showing you that this can be done at any age. We're 24 years old, still building businesses and trying to create generational wealth for ourselves. So I'm just glad that we are on the same page in that regard. And that's really what I took away from this, because I think that's very impactful for people to have somebody to look up to.
Mm-hmm. Definitely. Again, definitely great role model for people, especially her being what I call a super minority, you know, a black woman, that is like the ultimate mega minority in America. So really anywhere in the world. So for her to do that, man, it's incredible. And I love it. And I love what she's doing. And I love her, man. That's just, it's dope, man. So dope episode. But yes, that's it for this episode of the Money Monopolizers podcast. New episodes will be released every Thursday and will be available on Apple Podcasts, Spotify, and YouTube. Just search Money Monopolizers wherever you listen to podcasts. We hope you learned something of value today. If you did, we'd appreciate it if you rated us 5 stars and left us a review on Apple Podcasts. You can also find out more info about us on Twitter or on IG at Money Monopolizers. We post informative content on there that'll keep you engaged, so be sure to check those posts out and share them. But until then, we out of here.
You've been listening to the Money Monopolizers podcast, helping you take control of your financial destiny. To learn more about how you can be in control of your money, visit moneymonopolizers.com. We'll catch you next time when Alex and Marlon share more personal finance and wealth creation tips with you. Now it's time to take action.